Welcome to the Realtor Diaries podcast. I am Kim Jacobi, and with me, as always,
Elijah McGowan of the Jacobi Team at Century 21 Select. We are your go-to Northern California realtors.
Yes, we are. And in today's podcast, our topic is why buyers buy.
Yep.
You know, like, why do they buy a house?
I know.
What are the reasons?
Isn't it so much easier to rent?
I mean, there literally are people who they just want to rent because they don't want to have to take care of the house.
Yes.
You know, like
I'm of course the realtor friend of my friend group, and whenever I talk about like buying something, they're like, "Oh, I'm just going to rent forever because it's like when the toilet overflows, I don't have to deal with it."
right?
I'm like, fair. Like it's like a little bit,
No, yeah,
but also they're giving up a lot because a lot of my friends live in like LA.
and may I ask their age group?
Mid to late 20s.
Yeah, there's a possibility that there's going to be an internal clock that goes off for them that says they're not going to live forever, and like how are they going to make it in their elderly years?
Fair enough.
And so that's where buying a house comes in a lot of times, is because you're like, okay, well, if I live in this thing for 20, 30 years, I could sell it or pay it off, and that's how I'm going to make it.
And you know what? This has made me think, because they probably move to a new rental like every 2 years or so. And so it's easier for them to like move from a studio to a 1-bedroom to a 2-bedroom in rental.
Yeah.
Because it's not like they don't have to go through the real estate process. They just apply, rent the new thing.
Well, and there's going to be, with the way the real estate market changes, the rental market also changes.
Yes.
And there's going to be a pain point for them where that rent, the cost to rent, they're going to be like, we are paying so much to rent this, we can just buy.
Exactly.
Yeah.
And that's where I'll come in.
That's right. Yeah. So, I've been doing real estate for, it feels like 20 years, but it's been 11 years.
I was going to say, I thought it had been 10. Hold on.
It's 2014 is when I started. I got my license.
Yeah.
So why were buyers buying houses? So when I got into real estate, you have to remember that the crash was in 2008.
Mm-hmm.
And if I remember statistically, the bottom of the market, the cheapest houses were in 2011.
3 years after. So and then you were 3 years after that.
Right. And so 3 years after that. So housing prices were really, really low. Mm-hmm. And they started getting scooped up.
Yeah.
And so the housing market was booming. It was really good.
Mm-hmm.
And so when I got in 2014, it just climbed and climbed and climbed and climbed for 4 years.
There you go.
It started to kind of like even out though at the end of 2018. Mm-hmm. Or sorry, no, I'm ahead of myself.
Oh, okay, gotcha.
No, yeah, it wasn't like going crazy booming where there was multiple offers and houses were selling for 5% over. It wasn't like that. It was just a steady climb.
Okay, yeah.
But people could afford to buy a house. So people were like, I've been renting forever. I want to buy a house.
It was affordable, and so people could kind of start pushing the prices up just due to demand.
Or, we're pregnant with our first child. We're going to buy a house.
Yeah.
There
you go.
Or we're getting married. We're going to buy a house. All of these things.
Well, they always, it was easy once you had a reason.
Yeah. So that was kind of, and then here locally in our area, November 8th of 2018, we had the Camp Fire.
And that affected this area the most, but I mean all of Northern California.
Yes.
In all honesty.
I mean, California's been on fire for 7 years.
Yes.
7, 8 years now. But
I was in high school.
Yeah.
And I had I think it was the day after the fire started, I had taken the day off from school and I had blackout curtains. And so I'm playing my video games.
Yeah.
And I was like, oh my gosh, I've been playing for so long. I need to get up, eat, whatever. And I opened the curtains and the world is orange.
Crazy.
And
you were in Ukiah.
I was in Ukiah,
which is how far away?
Almost 100 miles to the west, like closer to the coast.
Yeah.
And the sky was like that for months.
Yeah.
Like it felt like the world had ended because I didn't go to school that day. I I was like,
I'm being punished.
the world is over. But
that was such a crazy time.
The end of 2018.
Yeah, I mean, essentially an entire town right next to us burnt down, and part of another town. And all of a sudden, Chico had 25,000 more people in it overnight. Yes.
Literally overnight.
And so that, I want to say the fire was on a Thursday. It lasted like 3 days, 3 or 4 days of bad, right?
Yeah.
And then it was like that following Saturday, I remember Emmett and I were like, should we do an open house? And we're like, yeah, I mean, people are going to they just lost their home. Some people are going to want to buy one right away.
Immediately.
And it was insane
really?
How many people wanted to buy one right away. Like they were homeless.
Yeah, they were.
And in their mind, staying at a hotel wasn't an option. So there was like this group of people where their house burnt down. The next thing in their mind that made sense to do was to purchase another home.
Yeah.
And so they would go and find a house that worked. It wasn't their dream home, but it worked for their whoever was in their group that was moving into this house.
Yeah.
And but then it worked for 5 other families too, or groups. And then the prices got jacked way up because they were paying
whoever can pay the most
over asking, right? And that went on just basically all of 2019. And there was a whole bunch of people that got their fire insurance money pretty quickly.
Yeah.
And then kind of in 2019, things started to level out a little bit, and our local market showed signs like maybe 2020 wouldn't be that crazy. Maybe it would start to calm down.
And we all know
what happened in 2020. So then
just exploded again.
COVID.
For a totally separate reason.
Exploded.
Every market had what you guys had in 2019.
Yeah.
The next year.
Right.
Everyone had that for a totally different reason. Was it like doubly so here in Chico?
Well, no, because we had kind of started to level out.
Okay.
But we still had, why were buyers buying in 2020 and 2021? It was still fire victims.
Yeah.
Like still today, we'll come across a buyer and they're like, we just have never bought since the fire.
Or even some people who just got their fire insurance.
Right. Yeah.
That's a lot more rare now. But last year it was fairly prevalent where people were just getting
Or the people who were involved in those class action lawsuits against PG&E. They got their money and it took them a long time. But so buyers were buying in late 2020 and then like all of 21.
Yep.
Because the thing that I noticed during COVID the most was that it caused people to want to move closer to family. And a whole bunch of people changed jobs or became remote workers.
Absolutely.
And so they had the flexibility for the first time ever. Like, oh, we're going to move, or like a family member moved here. And that was huge.
Yeah. And a lot of new needs as well, like with remote work, needing offices, needing more space because people are home all the time.
That's right.
A lot of stuff.
For sure. And so, not only did you still have the 5Ds going on, but then you had people needing the office spaces, people wanting bigger yards, bigger everything, because they were at home a lot more. And then, of course, the fire victims still needing a replacement property.
Yeah.
And then in 2022, the Fed started raising rates. And that leads us to something we're going to talk more about in the news segment, so make sure you check that out at the end of our podcast.
Yeah, and I mean, I've experienced like a buyer who needed to buy.
Yeah.
Like I think
what was happening with them?
It was my first ever deal, like lead I got from you guys, and I called, like they were in our system, and I called them like a call every lead, and I was just talking to them, and they said, yeah. We just got our 60-day notice to
So they were renting.
They were renting.
Yeah.
And they were like, yeah, we just got our 60-day notice. We are we have to either move into a rental, which we don't want to do again, or we have to buy a house.
Yeah.
And it's interesting because that's not really one of like the main reasons people usually like move on to buy. But I mean,
actually during COVID or after the fire, early 2019, a lot of local landlords had family that had lost their home in the campfire.
Yeah.
And so they were kicking out their tenants so their families could move in to those homes.
By the way, is a valid reason, like a legal reason for an owner to end a lease early, is to move family into the property.
If that tenant was month to month,
or
their
month to month,
year lease was up.
Yes.
Yeah.
But, okay, so it's not as uncommon as I thought.
I mean, I think it normally is, but 2019 it wasn't.
There you go.
It was like so many people were like, am I going to get kicked out of my rental,
Yeah.
Especially if it was a single family home.
And I'm really glad I was able to like help them. Like they moved, like it just happened. They ended up moving pretty close to a family member.
Yeah.
And it was a really nice, large manufactured home that like was bigger than their last place. And
That's
paid about the same monthly.
That's awesome.
And so it's nice that even though they were forced into that situation, like, I mean, it worked. Everything worked out for them. Like, it wasn't easy.
Yeah.
They had to move a lot of big stuff really quickly, and like there were pest problems at the house. Like, it wasn't easy or simple, but it worked out really well.
That's right.
So even if someone is almost like forced into that situation, which there's usually a myriad of options they can go with, like if the one that you choose can turn out really well, no matter what it is.
Yeah, and like you said, it may not be easy, but just because it's not easy doesn't mean it's the right choice.
Exactly.
Or doesn't mean it's not the right choice, or doesn't mean that it's not the smartest way.
Yeah, and I think I'm very thankful that someone can come to me and say, "Hey, I have this situation. Like, is the thing that you do the thing that I should do?" And I get to go to them and say, well, here's your options. And it can be the right move, but it might not be.
Right. If the numbers make sense.
Exactly.
Yeah. Which is
And I like being able to give people that agency. I don't know why. But it feels good to say, you can make this decision and it'll be okay.
Yeah.
Because it doesn't always feel like it'll be okay.
That's right. Yeah, for sure. Well, our next part of our podcast is our special guest today.
I know.
And one of his favorite things to say is if the numbers make sense. Because it's true.
Exactly. And he's one of my favorite people in the office.
Yeah.
Let's catch him. All right. And we'd like to welcome our special guest, Jim Heberle, the mortgage professor, which I love the title.
Thank you.
And, he's like one of my favorite people around the office. He's actually our in-house mortgage broker, mortgage service provider. But this is the second time I've asked this, but how long have you been like servicing loans, like helping people out with that?
Yeah, well, thanks for the kind words. And I've been doing mortgages for other people for 20 plus years.
Yeah.
Started out in the banking industry. There's pluses and minuses to that. Moved to where I'm now as a mortgage broker because that allows a lot more opportunities for the clients to get the best package for them, because we work with multiple lenders depending on whoever's doing the best for that particular client, that particular space at that moment in time, because it's ever-changing dynamic. So
you've moved from, like, you're in the banking industry, and then you'd be at a bank and you tout out their products and help people with those.
Right. So when you're with the bank, like I was with Wells Fargo, so I only did Wells Fargo loans.
Yeah, and so now you're a broker, and you get to hunt around for people.
That's correct.
With Stanford Mortgage.
Yes, exactly.
Yeah, and our CEO of our franchise, the Century 21 franchise, also owns the Stanford Mortgage franchise.
Yeah.
There's a great advantage to that.
Yeah.
Because if there's a problem, and oftentimes in escrows things can go sideways at nobody's really fault.
Yeah.
It just happens sometimes.
Yeah.
But when you have one head honcho at the top from all the different sides, we can all work together and come up with a solution much easier because we have, the big dog to go to the same person.
We're all on the same team.
So, right, exactly right. And that really does help.
Yeah.
A lot.
Yeah, for sure. So getting to our topic today for our podcast, it's kind of the way that we're titling it is, so why are buyers buying houses right now? And it kind of like speaks to the underlying tone of why would somebody buy a house right now? What's causing people to buy?
Yeah, that's such a popular question now.
Yeah.
For all the known reasons. You know, the quick answer to that is you're already buying a house. It's just you're already buying a house for somebody else. You know, because that rent payment goes to somebody else's mortgage payment. And when you buy your own house, you're buying your own house. And one thing that people don't often keep in mind is that when you make a mortgage payment, a principal and interest payment, the principal part is your money going into your asset account. It just happens to be your bank of house, right? So you're growing your asset base. So all that isn't going out the window, which it would be with rent.
Absolutely.
You know, part of that, and it grows over time, goes into your asset account, which is bank of house.
Yeah.
So people are buying houses now because it's always better to own your own house for that purpose. Because let's face it, you can pay rent for 30 years, and what do you have when you're done? In California, you pay rent on a house for 30 years, and if you just look at all the historical data, 30 years down the line, your house is going to be worth 3, 4, 5 times what it is today, based on all the historical data.
Yeah.
Right. So now you have a $1 million asset that you own free and clear. And if you rent it, how are you going to get $1 million in the bank?
Right.
If you're a hardworking person raising a family.
Yeah.
Well, it happens automatically when you buy the house. So.
Okay.
And another thing that I think is really important is when times get tough, and times are tough now, a lot of uncertainty, numbers are different and making it hard for some people to qualify. But when times are tough, people kind of clutter at home, which isn't the perfect word, but they cluster at home. They meet with their friends, they hang out at home because they don't want to spend money.
That's right.
And they fix up their home because when they come into their home, they want to feel good about it. Well, fix up your own home.
Yeah.
Right? Don't fix up somebody else's home for them.
Right.
And then when you come home, any change you make is increasing the value of your own home, your own asset. But then you don't have to ask any questions either. You know, can I paint the front door purple?
Right.
Absolutely.
Right. Sure you can. It's your house.
Yeah, totally.
So those are a couple of reasons.
So you work with buyers, obviously, who need a mortgage loan to buy a house. Are you seeing that, especially like I would say the last 6 to 12 months, those buyers are buying because of a life event?
I was going to ask a similar question because I've heard that there are like life events that tend to lead people into purchasing a home.
Right.
So that's our question.
Right, and that's very true. In any market, there's always going to be people buying houses because of the life events. And there are the 4 or 5 Ds, they call them.
Yeah.
You know, diamonds for engagements, right? Diapers for babies, right? Diplomas for graduations from college. Divorce for the bad D word. You know, so those,
death.
And death,
Right.
the ultimate.
Yes.
You know, so those are reasons why people will buy a house. You know, there's always the pressure also to like move into a bigger house as your family grows, or move to a different location because the job changes.
Yeah.
You know, so
Okay.
a lot of pressure to buy a house, even when times are tough. But if the numbers make sense, it's always a good time to buy California real estate. And that's why you want to talk to a mortgage advisor. You know, a mortgage advisor is not an order taker.
Right.
You know, they advise you on your mortgage and how do you maximize that to your overall plan of legacy wealth and financial security for when you retire. So all great reasons to buy. And if the numbers make sense, it's always a good time to buy.
Yeah, and do people like tend to come with you knowing that the numbers make sense? Or usually do they come to you and say, I don't know.
That's a great question. You know, the fact of the matter is most people, especially first-time home buyers, but even repeat buyers, don't have a true understanding of their financial picture or their financial profile. You know, and that's just a failure of the education system. You know, they should teach that in middle school. They should teach that in high school. They should teach that in college. Cash flow management, credit management would help everybody so much. But you're right. People don't really have much of a clue. And even if they are experienced and have done it many times, we all know that you're sitting around at a party with friends, you start talking about things, and then you start remembering all the things you forgot.
Yes.
Yeah.
I knew that before, but now I forget.
Right.
Now I remember it again. You know, that makes sense. And that happens in your conversations with the mortgage advisor, no matter how experienced you are.
Okay. Yeah. That makes sense.
It's pretty cool.
I heard, I think one of our managers said that most buyers look at home buying from the cash flow perspective because they're living on their paycheck that they get every 2 weeks every month.
I was going to ask you before we started the podcast, you turn your phone down.
I shouldn't have taken off my watch because I had my watch on.
Oh.
Sorry.
Everybody pauses and checks their phone.
I know, exactly.
Mine's up there.
Elijah,
use
sacrifice,
one.
and mine is off.
Yours has a switch, though. That's not fair.
Hard work. Gotta love it.
All right.
All right.
Pick back up where you were.
Yeah.
Manager.
Yeah, so our manager was talking about how most buyers will view home buying from the cash flow perspective, which makes sense because you have all these calculators online that are talking about like your monthly spend. And that's how rent is formulated as well. But that us as real estate professionals tend to look at it from an equity perspective. And do you think it's like an advantage for us to tend to look at the equity of things like that forced savings style and be able to teach people that, hey, even though your cash flow may be lessened, it is a forced saving situations where later on down the line you'll be able to recapture.
Right. It is really important to show that there is a cash flow going into your home, which is an asset, which is yours forever. Nothing's more important than monthly cash flow.
Yeah.
Mm-hmm.
So if your monthly cash flow goes sideways, things aren't going to be good. And that is true of business.
Right.
No matter what the business is, it's true. It's in private finance too also. So that's why it's so important to talk to the mortgage advisor, get the monthly cash flow down and dialed in. That's the main component. But there's so many other components to it, like you're referring. Those are all really important too. But the most important thing is monthly cash flow. And there are so many ways people can improve their monthly cash flow or manage it just by discussions with a mortgage advisor.
Really?
Because a lot of people are spending a lot of money that's really not necessary. And once you identify it, because I go through their bank statements, I get their financial history.
Yeah.
Then they go, oh yeah, I shouldn't do that. Or,
You're like, do you really need a $9 Starbucks every day?
Every
I had a client,
day.
husband and wife with 2 girls, darling girls. They were spending about $2,000 a month at Starbucks.
What? How is that possible?
They were going to Starbucks at least twice a day with the whole family.
Oh my
and
God.
buying all the little breakfast sandwiches and stuff like that.
Oh, they were eating at Starbucks.
Not
just
drinking. It was like
they might as well open up their own Starbucks.
They should have opened up.
Probably would have improved their cash flow situation.
And they wondered why they couldn't afford to buy a house.
Yeah.
So we talked about that, and they said, "You're right. That doesn't make sense for us to do that." And they bought a house.
There you go.
And they cut it down to I don't know what, but they're still in the house. So.
Absolutely. So
that's an extreme, but that does happen.
It's a great story.
You're spending it on something.
The paper shows it. It was just amazing.
Yeah.
And it was just like, well, when you add it up, you can see how it happens, because the girls are getting their, breakfast sandwiches at $4 or $5, and, the parents are getting the double, triple shot foo-foo drinks, that cost $8 or $9.
Oh, yeah, that adds up fast.
So, it was remarkable.
So I was looking through, I had Jacobi help me out with, I asked it, why did buyers buy houses through the decades? What were some of the limitations as to why they were or were not? For example, in the 1980s, dual income households did become more common, and there was a lot of career advancement that was happening there, but mortgage rates peaked at 18% in 1981. So that definitely was a time in the early 80s, mid 80s, when buyers only moved when they had to, like a job transfer, divorce, or something like that. Do you think that we are in kind of that current state right now where, even though, our interest rates now at 7, give or take, we're not 18%, but home prices are higher than they were in the early 1980s. But do you think that we are in that time where buyers are only moving when they have to? Like, do you see a lot of buyers doing move up buying, or just because they want a prettier kitchen?
Right. It's more the life events is forcing most of the moves. But just on that note, I bought my first house during that period of time.
Yeah.
We were given the option of a 30-year fixed rate at 30%. At 17%. We got a 1-year adjustable at 13.
Mm-hmm.
Right.
Wow.
But what was going on there was I was a bachelor. 3 buddies of mine were also confirmed bachelors. We were being forced out of the house we were living in. So we decided to go rent another house. We looked at all the houses that were available and nothing that we liked. So we went out and bought our own house.
Nice.
There you go.
So there's ways to work around it. There's money from family members that can be gifted to you that can help. I'm a big fan of living in a home, especially if you're single with somebody else.
Mm-hmm.
You're going to have a roommate typically anyway.
Yeah.
We came up with that contract over a coffee table in about 15 minutes.
Yeah.
And it just had a handful of points.
Yeah.
The most important was if you didn't buy it, don't eat the last portion in the refrigerator.
And there you
Drink the
go.
last beer.
Right?
You know,
Yeah.
Don't do that.
Never the last one.
That'll break a
upset.
deal. Yeah. For sure.
But we lived in that house for 28 months. You know, Mike and my future mother, my children moved into that house with all of us during that period of time. Mike had a girlfriend that moved in. She wanted him to herself. So she forced the sale of the house.
Mhm.
Oh,
We all went out and bought our own places.
There you go.
You
Because
know,
you had
after
built up
28
those.
months.
Nice.
Yeah, and we just did, we worked on it together.
Mhm.
You know, we were all handy. We all enjoyed it. We partied seriously together.
Yeah.
It was a great post-Victorian and just outside downtown Santa Cruz.
Oh, fun.
Nice.
Yeah.
That's
it was,
awesome.
And we're best friends to this day. So
That's so cool.
a lot of different ways to buy a house.
Yeah,
I know. That's so
If
awesome.
the numbers make sense.
Yes.
that's right. And you say that to us a lot. And can you share with those who might be listening or watching right now? What does that mean if the numbers make sense?
But once again, the monthly cash flow is just so critical. But beyond the monthly cash flow, to me, the numbers making sense means you have an ace in the hole or two. You know, that's when I get in discussions with my clients. If things go sideways and you lose an income or something happens here, an unexpected expense, you know, what's your ace in the hole to get around that for a period of time to get to another healthy spot?
You have a backup.
Right.
Yeah.
And typically you can identify different aces in the hole. You know, what you can do if you have to get there.
What are some that people could maybe work towards, ace in the hole?
Well, you know, if you're just a couple without kids, it's really easy just to rent out a room.
Yeah, that's true.
You know, so you get in trouble and you rent out. You know, in today's market, you can rent out a room for $800 to $900.
That's a great idea.
You know, so and that's a beautiful ace in the hole.
Yeah.
You know, when I'm talking to like a single mother, we'll find another single mother that wants to buy a home.
Yeah.
You know, because there's one, you always have a second set of hands, which is so important. You know, when you're a single parent,
Mhm.
right? Two, you can leave your house and it's still safe,
Yeah.
right? Somebody's there watching over it, and then you got a built-in babysitter. So,
Yeah.
Hey, there you go.
That's a great idea.
And for single parents, our fathers, do
Yeah.
that.
Oh yeah.
Yeah.
Because I was a single father, so
That's right.
you know, I'm quite aware of that. It's not just the single mothers
Yeah.
that can use that; it's the single fathers too.
Yeah.
You know,
Yeah.
so so that's just one ace in the hole. You know, there's always parents that you can go to. When you talk to your parents, though, I tell my clients, you're not going there and asking them to borrow money. You're going there with a business proposition.
Mm-hmm.
It's just like, hey, look, you lend me the money so I can do this, and in X number of years, I'm going to give you 6% or 7% or 5%, whatever the number needs to be on your money.
Right.
And you know it's a really great investment because I'm family and I'm going to pay you back.
There you go.
You can even put it on paper. You can even attach it to title. You can make it as strong as you want.
Really?
But you're not going to them saying, "Give me money."
Right.
You're going, "Let's enter a business agreement together."
Mm-hmm.
And then they're much more open to the idea because it's, well, I'm only getting 6% guaranteed on my money here.
Right.
You're going to give me 6%. I tell you what, you give me 6%, but I also want some appreciation growth on the house too during that 5-year period of time.
There
So
you
That's
go.
right.
kicking a little bit extra sugar there.
Yeah.
Some
So-
savvy parents.
Yeah, and parents are more than willing. Grandparents are really happy to do that.
Yeah.
Mhm.
Typically, it has to be a family member to get money gifted from somebody to help you buy a house.
Okay.
Aunt or uncle, but can't be a stranger off the street.
Yeah.
But
Right.
yeah, it's a lot of different ways to go.
There's a lot of ways to help someone get to the point where they're ready to buy.
Yeah.
And there is no more secure or no more leveraged investment with such a little amount to bring in as California real estate.
Absolutely.
Yep.
The most secure, the most leveraged investment out there with some of the greatest returns.
There you go.
That's for sure. Yeah. Well, thank you, Jim. And for those of you watching or listening, Jim Heberle is with Stanford Mortgage. His office is here in the Century 21 Chico office. And we're going to be sure to put his contact information in the description and give him a call. He's very, very knowledgeable, as I'm sure you saw yourself.
Well, thanks for the time, and
Yeah.
we'd love to help you folks and just talk too. So
Thanks for coming.
call
Yeah.
anytime. Thank you so much. Appreciate
All right.
it. Thank you so much.
Thank you.
And now it's time for the news. Today's topic, of course, is the reasons people buy and some of the reasons they sell as well.
Mm-hmm.
And I'm going a little more story-based for my news, and so it's a little more freeform, but I think you have something to read us, you have some stats, some interesting.
Yeah, so kind of like our vision for the topic of this podcast was that right now, with interest rates being around 7%,
Yes.
housing prices being where they're at, that the reality is, especially compared to maybe 2021, when interest rates were in the threes, that people are not buying houses unless they have a forced life event.
Yes.
As we talked a little bit about during our guest segment with Jim.
Absolutely.
So when I was thinking about the news portion of this podcast, I was thinking, well, gosh, let's recap. How did we get here? How did we go from the low threes to now hovering around 7?
Absolutely.
And are we ever going to go down? Is it going to go up? What's it going to do? So if you guys remember, the feds were trying to battle inflation. Inflation was showing that it was on the rise.
And that's that's the Federal Reserve System, right?
Because
they're the ones who decide interest rates for banks, basically, the Federal Reserve System.
Yeah. They get together every 6 weeks and they look at statistics, the job, the unemployment rates and what are those doing, and some other factors, and then they decide if it would be a good idea to raise the interest rates or not.
Exactly.
And that's the interest rates that banks lend each other money on.
Yeah.
And then, credit cards, car loans, house loans, everything else takes that rate and then adds their own
fees,
right,
whatever it is to it.
Well,
any number of things.
Because of the pandemic, the feds have lowered the rate to 0.
Yeah,
it was
which
0,
is crazy.
0. Yeah.
There was no cost to borrow money for banks, for people borrowing from the Federal Reserve.
Yeah. And the peak on average unemployment rate in 2020 was 14 point, I can't find it quickly on my paper, but it was 14 and a half.
Yeah.
And to put that into perspective, the Great Depression unemployment was 25%.
Yeah.
So we were still a long ways away from Great Depression days, but 14.5% unemployment.
And that was at least partially due because businesses were subsidized in some ways and they could get a loan at a super low interest rate to stay afloat.
Yeah. So the feds wanted to wait to start raising that interest rate from 0 until they felt that the job market had kind of recovered.
Come back to normal for the time.
Yeah, and interestingly enough, they didn't want to just look at the overall number. They wanted to make sure that specifically people in the low income to middle income job industry statistics, they wanted to make sure that those workers had recovered.
Okay.
Not just, the tech jobs. And
they needed the foundation to be good.
Yeah, they wanted to make sure that low and middle class families could make it if they upped the rates a little.
Exactly.
So between March 2020 and January 2022, the average annual inflation rate was 6.34%.
Mm-hmm.
And that resulted in an 11% increase in prices.
Wow.
Yeah. And so food and energy prices soared.
Yeah.
And Russia invaded Ukraine. And so Powell, the head of the feds at the time and still is now, he kind of took a page from the book of another Fed chair, Paul Volcker, who was the Fed chair back in the 70s.
Okay.
Inflation, back then, 1979, inflation hit 11%, and it was raising by 1% each month.
Wait, inflation was rising by 1% each month?
Yes, and it had hit 11% by 1979. And so that's why interest rates were so high in the early 80s.
Oh, like we talked about.
That's right.
Jim got one at 17% interest.
Right. So in 2 years, Volcker hiked the interest rates from 11.2% to 20%.
Oh my God. And that's the Fed rate.
Yeah, that was the Fed rate.
Oh my God.
Yeah. But what it did was it basically put a temporary stranglehold on the economy. So inflation stopped. And by 1986, inflation was back down to 2%.
Yeah, I mean,
so it worked.
It really worked.
The tough love tactics. So that's why Powell, they did, starting in March of 2022, 11 interest rate hikes between March of 2022 and July of 2023. Yeah. Just a little over a year, they did 11 of them. It made borrowing more expensive, the housing market slowed, the stock market lost 19% in 2022.
Wow. That's so interesting to hear, like the wider view.
Yeah.
And especially like why that is what happened.
Right.
Because of course in the moment people are talking about like doom and gloom, right, as people do. But it's nice to hear that it's happened before.
I know. Well, and the good news was in 2023, the inflation, remember how I said that it was up to, what did I say, 6.7 or 6.7% in, let me find that, 6.34%.
Oh, so not that high.
Between 2020 and 2022.
Yeah.
Well, by 2023, it got back down to 3.3.
Oh, wow.
So it cut it in half, the inflation.
And so, I mean, that just shows you why, like, they are hesitant to lower interest rates again.
Yeah.
Because they don't want to just bounce right back to where they were.
Yeah, in the end of 2023, beginning of 24, people were saying, some analysts were saying, oh, well, now that we've got inflation down, they can lower the rates. No, those rates are going to hold steady for a while just to keep inflation down.
It could be years before we see a rate lowering. And then we would see things go back to normal, I suppose.
That's right. So we're somewhere, the Fed rate is somewhere around 5.4.
So not 20.
Something like that, yeah. I think that's where we're at, and mortgage rates are around 7.
That's interesting.
High 6s, low 7s, yeah. And they've been that way for a while now.
So we're not financial analysts or specialists in that way. Of course, we're just reading from an article / some data you gathered, right?
Yeah.
But from what I just heard, it feels like we're maybe, like, based on his predecessor's plan, we're like 3 years into the 6-year plan.
Yeah.
And so it's like, we're in the middle of things getting worse before they get better.
Yeah.
Which isn't a great feeling.
Tactic. And, most people say the worst is over now. But
I mean,
what's going to happen in the world and the economy, that could affect things as well.
Absolutely.
Yeah. Tariffs is one thing. Who knows how that's going to affect our economy?
I know.
When the dust settles, and you just never know what's going to happen.
It's so interesting to hear.
Yeah.
Well, my portion of the news is not nearly as well structured.
That's okay.
But also, I've only been an adult for a few years, and for real estate, an even smaller amount of time. But I've been to 2 presentations by a man by the name of Brett Matsura, who is
he's with Coldwell Banker.
He's with Coldwell Banker. He's he's like their vice president of education, if I remember correctly.
Something like that, yeah.
And I've been to 2 of his presentations year over year, and it was so nice to see. Well, maybe not nice, but definitely interesting to see the changes he made in the same format of presentation. Yeah,
and he was a big statistics guy.
Yes, very much so. He even included the change from last year in his statistics in his presentation, which was really nice for me. And the most interesting part that stood out to me is because I took away last year that there's like 5 main reasons that buyers, buy, and sellers sell, and those are like the 5 Ds that we spoke about earlier.
Yeah.
Diamonds, diapers, death, divorce, and there's one more.
Well, the one that people are starting to say to add is default.
See, no, that wasn't.
But it wasn't one of the 5. You went too fast.
I did. Okay, diamonds. Diapers, diamonds. We said it earlier.
Just go back and watch the segment with Jim Heberle.
Exactly. 5 Ds. This year, there were only 3. And one of them was removed, and it was divorce, death, and default.
Mm-hmm.
And he only spoke about how those were reasons for people to start selling.
Mm-hmm.
And he didn't speak about the reasons people go to buy at all. And I thought it was so interesting, so much so that I found him like out at the convention, and I like struck up a conversation because I wanted to know like why'd you remove that portion of the presentation? And he said because those life events aren't enough now for the majority of buyers to go on the buying journey to start.
Yeah.
Because of economic pressures, even if you're having a baby or getting married, you're more likely to wait than to go want to buy a house with your new situation.
Right. Because maybe the numbers don't make sense.
Exactly.
Maybe you don't have an ace in the hole.
Yeah. Like getting married, like the economic benefits might have, and the want to own something with your new spouse would make you want to buy a house.
Yeah.
And you would have the ability to do so. And similarly, with having a child, it's like, okay, we need more space, and we probably have like the ability to work enough to have the income to buy a new house.
Mm-hmm.
That's no longer the case.
Right.
At least for 2024, it was no longer the case.
Yeah.
And
we're seeing that same thing here in 2025.
Yeah, exactly.
Yeah. Because interest rates really haven't changed a whole lot since last year.
Absolutely.
And housing prices have not gone down.
No, they don't tend to go down.
Yeah.
Over time.
Right.
But yeah, that's my take on it. It was really interesting to hear that, and I mean, it's gonna be weird to see what changes over the years.
Yeah, very interesting. Well, thank you so much for joining our podcast this session, and we will catch you on the next one.
Oh yeah.